special. Okay, the equity rally continued in 2015 after a short correction, but the reasons based on this run-up was very different compared to 2014. Now, take a look at the one in 2014, it was about 55%, approximately. The second one was about 40% before we noticed the recent correction. Okay, if you spread it out across the number of sessions it took to reach from the bottom to the top, the first one was a bit faster as well. It was about, on average, 2% a day. The second one was a bit slower, was about 1.2% across more sessions as well. Okay, but if you just use the A50 as a gauge, it's not the best gauge to look at this index. What I will show to you is this. Okay, you cannot see it really very well here. There's actually this blue color bar chart down there. The blue bar chart represents the Shanghai Composite Index, whereas the red and green candlesticks represents the A50. Now, we mentioned before, A50 is 50 largest market caps. Okay, these are the biggest companies in China. Shanghai Composite comprises of small, mid, and large caps. Now, you can see that in the first run-up, the 2014 run-up, the blue bars lagged behind the red and green candles. Okay, meaning that most of the herd buying was concentrated on the large cap stocks. But in the second run-up, right, the blue bar kept on par with the red and green candles, meaning this time round, interest across Chinese stocks, firstly, was very well on par across the entire space. It's no longer a neglection of one space for another, it's rather the interest was spread quite evenly. And I think one of the reasons why we are seeing more interest in small and mid-cap Chinese stocks is because there is certain reforms in the brokerage sector, and I think the Western players are coming in right now, and they are looking at all these really value stocks in the mainland, and that's why we see, other than the normal big names, we are getting a lot of interest in the small and mid-caps. Okay, for reasons why for the second rally, same reasons as well. Monetary policy, you can see the third rate cut in almost 6 months, just this month. But what was really special about this 2015 was that the A50 ran a lot more higher on news of reforms. Okay? Now your Dow Jones traders and S&P 500 FX traders, okay, you all know the economy very well. Bad non-farm payrolls, the index falls, good employment report, the index rise, correct? Okay, that is one way of looking at things. And then you have things like the STI, correct? When the Dow Jones closed lower overnight, chances are the STI will open lower this morning, correct? That's another way of looking at it. Now, China is special. It runs on government reforms at this point of time. Okay, throw out your PMI, throw out your GDP. It's not going to move the index accordingly to what you think it is. On days you think that it will fall, it will rise. On days you think it will rise, it will fall. But what is really solid about this second run-up is that when there is a good reform coming through from Beijing, right, the E50 will go up. And conversely, if there's a margin crackdown of some sorts, it will fall. Okay, you can see all these news have been coming up in the last 4 to 5 months. Reform plans, I think just this week. IPO, there was another hot topic recently. And then of course on the flip side, when there's a crackdown on margin, the stocks tend to fall as well. Okay, so basically 2014 rally and 2015 rally, two main differences. Okay, the 2014 rally I felt was built a lot on herd behavior. You can see in the stock turnover volume, you can see in the composition of the volume. 2015 was a bit more sensible. It was built a lot more on news flows, and that is something that is more comforting to investors this time around.